Good morning. Ira Epstein of Berlin & Associates with your morning flash update for this Friday, the 10th of March, 2017, about 9:30 a.m. Central Standard Time. Been busy, as you can imagine, had a lot to talk about. Let's take a look first at the jobs data. The market expected in the neighborhood of 200,000 jobs. They got 235, but I got to tell you, there was a whisper number. There always is. 230 was that number. Got close to it. You can see the unemployment rate stayed where it came in, expected at 4.7. Private payrolls went up to 227. Prior was 237. Government payrolls, they were down 10,000 in the prior time. They went up by, actually they were looking for that to drop, so that wasn't the most friendly figure there. The labor force participation rate, about where the market expected it at 63. Average hourly earnings went up 6 cents. All right, the market was looking for that. Canadian jobs data, that fell. The jobless rate fell to 6.6% from January, 6.8. Forecast was 6.8, so that was good. And as you can see, they added in that 15,000 jobs, of which 105,100 were full-time. That was very, very good too. So let's talk about what this did to the marketplace. First of all, there's the old adage, you sell the rumor or buy the rumor, depends which way you're looking, and on the fact, you do the opposite. So the stock market initially rallied pretty big on the data. You know, everybody said, oh, higher interest rates, blah, blah, blah. One of the things that I've been telling you here is I didn't think they'd have any importance. Why? Even if you had a 170, 160 number, the market would say it's an aberration. You get up to the 230. Now the market will say, okay, is that enough to get the Fed to really move 4 times this year, or is still 3 the number? That's what I think you're looking at. Energy complex. The question I have is the market going to try to run stops one more time to the downside or not? That's the question. Remember, you had a huge open interest build from the mid-February to just recently in March timeframe. That's not my opinion. It's the CFTC data. And most of those bets, as the analysts are writing, were on the bull side. This market's definitely hurt those traders, so we'll see what happens there. Bonds and notes, take a look. Unchanged. So this news was already, as I'm saying, probably discounted. What else are you looking at on these boards? You're now into the June time frames, and you should be switched over in all your currencies. You don't want to be trading the Marches any longer. That could be a problem for you. The gold market, a lot of people have already called me this morning. What do I think? You know, the first stopping spot for the market is right in this area. It got through the 100-day average, which was the first support. 1,200 is a natural, what I call a natural number. In gold, the old days, it used to be moving $25 or $50 increments. I still think that's very realistic. And 1,200 being an even number, it's like 1,300 or 11. It's got an aura about it that I pay pretty close attention to see just what's going to happen. As for the stocks today, it wouldn't surprise me if the market has to do more base building. I think that the punch is now out of the market off this report, and we have to wait and see what's going to happen. I'm still looking at the British pound having some bearish news to it. In the euro, the market looks like it might have gotten up to a point here where it could encounter some resistance on the upside. I want to remind you all, one of the things that I offer is teaching you what I do in my updates. And I can't make it any easier. I have 54 videos that I put together in a course. You look at the video, you get the charting software, you follow what we do. It's that simple. So you're learning from there. Then in the mornings, what I do is I get here, and the first thing in the morning, I record at 8:30 a.m. Central Time. I want the meat markets to be open. I'm here earlier than that, and I'm working way earlier than that. Now you get to see how the days work. So you're looking with the swing lines, you're working with moving averages, slow stochastics, window envelopes, and I'm putting it all together for you. It's only 5 technical indicators. I really believe I can teach you how to work these and come up with a game plan on any chart. I don't care if it's stocks. I don't care if it's anything you can chart. I don't care what it is. This technique brings together where you can decide what is a trend, what is the risk associated with the trend, is the trend getting stronger, is it getting weaker, where would I be wrong that trend, and what are the profit objectives. That's my goal, and the course does it. In addition, you get, for that in the course, you're going to get charting software to work with it, $100 value. The next thing you're going to get is 30-day access to my research, $60 value, and the whole course with the special, you're going to type in IRA 15. That's all, IRA 15. Go to that, and guess what you get? You come into the course, you get it for $74.95. No shipping, no handling, none of that nonsense. Take advantage of it. Think about it over the weekend. I'm Ira, and this is a special that I'm offering right now that's going to go away, and the price of the course will go up again. That is a guarantee from me. I'm Ira. You have a good day.